COVID relief is quickly becoming a thing of the past, and idle PPP and stimulus checks are becoming less and less accessible. But just because these things are quickly entering our rearview mirrors does not mean that there aren't still government resources out there that you can take advantage of for your small business. And so that's exactly what I want to talk about today. In this video, I'm going to be doing a very deep dive, probably the most extensive video I've done on this topic, covering exactly what you need to do in order to get an SBA loan. I'm going to be talking about what types of businesses qualify for an SBA loan. I'm going to be talking about what you need and what requirements you must meet in order to get approved. I'm going to talk about how to build a business plan, what should be included in your business plan, how to talk to banks, how to get approved, and how to ultimately get funding. If you are a business owner or if you want to start a business, this will be an extremely valuable video for you. So let's get started. Now, for those of you who are new to this channel, let me give you a brief introduction. My name is Aubrey, this is my channel, and I am a small business owner, entrepreneur, and YouTuber. And whenever I was in my early 20s, 21 specifically, I was approved and I was distributed $330,000 through the SBA to start my first business. So I know firsthand and from personal experience the process of how to get approved for an SBA loan. I know this process inside and out because I lived through it firsthand not that long ago. Now, like I mentioned in the intro to this video, I'm going to be outlining the entire process of how to get approved for an SBA loan. This will be the most extensive video I've ever made on this topic, and we're going to really be starting from start to finish. Now, this video will be a bit on the longer side, and so if you aren't interested in watching the entire thing and you want to skip around, I will have some timestamps down in the description below that will help point you to the different sections that may be helpful to you. While you're down in the description below, if you could check out some of my courses, some of my links that I have for different resources that I provide to you guys, I would greatly appreciate it. So without further ado, let's dig into how to get your first SBA loan and how to get approved for small business funding. Now, whenever it comes to loans and grants through the SBA, there are actually tons of different options out there for different types of business owners. But for the sake of this video and really kind of honing in on one type of loan program, we're going to be talking about the SBA 7A loan program specifically. This is sort of the SBA's most mainstream program. Whenever you talk about getting an SBA loan for the first time for your new business, oftentimes it is in the context of a 7A loan. This is what I got, it is what I have the most experience in, and because of that, from here on out, I'm going to be referring to just general SBA loans, but please note that I am referring to the 7A loan specifically. Now, whenever it comes to getting an SBA loan, there are some surface level pieces of criteria that every business must meet, and the kind of most obvious one of these pieces of criteria is you must be considered a small business. Now, whenever it comes to the SBA's definition of a small business, there are really two key pieces of criteria that the SBA looks for to determine whether or not you are considered a small business. Number one is the number of employees that you have. Number two is the gross receipts that your business shows. And these two pieces of criteria are going to be different from industry to industry. For example, if you have a small business that's in the restaurant industry, the criteria that you must meet to be considered a small business is going to be slightly different than if you have a business that is in the automotive industry or the agricultural industry. There are different pieces of criteria for different industries, and I will include some links down in the description below that can help point you into the right direction of whether or not you would be considered to be a small business per the SBA's rules and definition. Now, I would like to state that the vast majority of people that watch this channel, based off of what I know about you guys, what I know from my analytics, the vast majority of you would qualify per this definition. This definition by the SBA is typically saying that you are not considered a small business if you make over like $750,000 per year and if you have over 250 employees. And the vast majority of you guys that watch this channel aren't even close to that number, which means that you shouldn't have a problem meeting that piece of criteria. But there will be some other pieces of criteria that are very important that you must meet in order to be eligible for an SBA loan. Now, not only are there some real solid, real outline pieces of criteria that you must meet in order to be eligible for an SBA loan, there are also different types of businesses that the SBA accepts. But the good news is that if you're somebody who is interested in pursuing an SBA loan, then there are probably one of a few categories that you would fall into that would help you determine if you would be eligible. Number one is online shops or online retailers. Now, what I mean here is I mean things like Etsy shops, Shopify stores, boutique shops, selling things online. I get a lot of questions from you guys on a fairly consistent basis asking the question of, hey, I have my Shopify store, could I get an SBA loan to help grow that? And more often than not, the answer to that is going to be no, unless you have a proprietary, legitimate product to go along with your online store. Whenever it comes to online retailers, especially online retailers and business models like Shopify, but even online retailers in more niche, more customizable industries like Etsy or like boutique shops, the SBA views this type of industry as a really highly competitive, highly saturated, and a very risky market. There is simply too much competition, and the SBA doesn't really want to be involved in that type of business. If you are somebody that has an online business and you're wanting to expand that business, there is a very low chance that you are going to be able to use an SBA 7A loan in order to do that. The one exception to the rule would be if you are somebody that has a solidified business that has proven itself for years and you are wanting to expand that business substantially, and you can prove that the SBA funds would be used and are needed in order to obtain that growth. That is the only way I see that the SBA would actually give funding to an online retailer or an online shop. And whenever it comes to business models like Shopify, for example, or drop shipping, there is virtually zero chance that the SBA would fund that type of endeavor. So if you have an online business, unfortunately, it looks as though a 7A loan through the SBA wouldn't be an obtainable route to go down, and you would probably be better off going another route. The second type of business is starting up a brand new business from scratch. And this type of business is a business that the SBA would look to fund. Now, I'm talking about things like maybe an automotive shop, maybe a brick and mortar shop, maybe you have a type of service industry business that you're wanting to start. This is the type of business that the SBA typically does look to fund, but there are some key things that the SBA will look for in you before they will grant funding. Now, I'm going to go into a bit more detail about this a little bit later on, so I'm just going to skim over it here. But whenever it comes to getting a loan for your brand new business, the SBA is going to, number one, want to see that you have experience in that industry. Maybe you worked for another company doing this exact same thing, and now you're starting your own company. Maybe you have a lifelong amount of experience in this industry, and now you're starting your own business. Maybe you had a business very similar to this, you sold it, and now you want to start another business. There are a lot of different ways that you can show that you have the experience in order to start the type of business you're wanting to start. But the SBA will without a doubt want to see that experience. Number two is they will want to see that you have a well thought out business plan. The SBA likes planning. They want to know that you know what you're doing and that you have a plan for your finances. So if you're somebody that's wanting to get an SBA loan, you will really have to think out why you need this loan, what you're going to spend this money on, and why the funds are needed to grow or start your business. Basically, what I'm trying to say, in short, is that the SBA will absolutely fund a brand new business, but they don't want to fund a brand new entrepreneur or somebody that's brand new into the industry. If you're starting a business from scratch and you need SBA funding in order to start it, you will need to show that you have the experience, the know-how, and the ability to make that business successful. The third circumstance where you could end up looking to get an SBA loan is in the world of franchising. For example, a franchise business would be like opening a Panda Express, opening a McDonald's, opening a 7-Eleven gas station. There are literally hundreds, if not thousands, of different examples of franchising. The SBA is very franchising friendly. If you're wanting to start a business or if you're wanting to open a franchise, an SBA loan is a very, very viable route to go down. And in a lot of cases, the SBA will have a franchise approved vendor list that will allow you to choose a franchise that has already been approved and vetted by the SBA. This is a great route to go down. The SBA funds millions of franchises per year. It is a great, great option for franchisees. And the fourth and final category that I want to mention is somebody that already has a business and you want to expand that business, and thus you need SBA funding in order to do that. This could be maybe you have a small operation and you need to fund a big purchase order, so you want to get an SBA loan in order to do that. This could be maybe you have a business but you've outgrown your warehouse, and so you need an SBA loan in order to get a new one and outfit that new warehouse. There are a bunch of different examples as to why a business, a pre-existing business, would need funding through the SBA. But more often often than not, this is something that the SBA would be interested in pursuing as long as you had the financials to back and validate the SBA loan. So now that we know what types of businesses the SBA is and is not interested in pursuing, now let's talk about what you need to have prepared as a business owner, what you need in order to expect to be either denied or be accepted into the SBA loan program. Number one is your credit score. You have to have a good credit score in order to get approved for an SBA loan. You have to have something that's in the 700s, 750, 760, 770 is ideal, if not 800. You might be able to get something if you're in the low 700s, but it really has to be a good credit score. Number two is you have to have cash. You have to have something to be able to put forward to the SBA. The SBA does not want to fund a business and have 100% of the risk. They want you to put some skin in the game. And more often than not, that skin is going to come in the form of a 20% cash infusion from you. Oftentimes, you will have to contribute 20% of the total amount that you're requesting in order to get approved for the loan. Now, this applies to people that are new to the world of SBA loans. If you've never taken out an SBA loan, if you're new to the world of business, and if you want to get approved for the loan, more often than not, you're going to have to contribute at least 20%. Now, if you're somebody that is like a seasoned entrepreneur, you've gone through this process dozens of times, you have a lot of money, then you probably would not have to contribute that 20%. You could probably form a relationship with a bank in order to bypass that 20% requirement. But in the context of this video and in the context of who's watching this video, more often than not, you will have to put forward that 20%. Now, this exact process will be different from bank to bank. It will be different depending on what type of loan you get and how much you're asking for. But in general, you will need to have the ability to fork over 20% of your loan amount and contribute that on behalf of yourself to your business. If you're not able to do that, then you will have a tough time getting a loan. Now, in addition to contributing about 20% of the total loan amount, you will also oftentimes have to offer some form of collateral. This could be in the form of maybe another business that you own. It could be the form of a house. It could be the form of an investment property. It doesn't really matter what it is, but this is another example of giving the SBA something to ensure the loan that they're giving you. It's another way to put skin into the game. Now, similar to the 20%, depending on your financial situation, depending on your investments, depending on your business experience, there is a chance that you will not have to contribute any collateral at all. But for new entrepreneurs and for new business owners, chances are you will have to contribute some form of collateral, whether that is your house, an investment property, whatever the case is. And basically how that works is you will have to sign over whatever piece of collateral that you give. And in the case that you default on your loan, the SBA is able to take that piece of property. So for example, if you were to sign over your house as collateral, and if you were to become default on your SBA loan, then the SBA would foreclose on the house and they would use the house to recoup some of the losses that they have had from your SBA loan. The exact process of paying this 20% and giving this piece of collateral will be different from loan to loan and from bank to bank. But it is important for the sake of this section to once again reiterate that in order to really be eligible for a first-time SBA loan, you will have to be prepared to pay 20%. You will have to be prepared to give up some form of collateral. So we've talked about what types of businesses are like SBA fundable businesses. We've talked about some of the things that you need to have prepared or you should have ready in order to be eligible for an SBA loan. But now begs the question of how do you actually go about approaching a bank and what do you do in order to get approved? Now, the thing about SBA loans in general is that unlike the EIDL program where you literally just went onto the SBA's website and filled out an online application, the SBA 7A loan program is vastly different. And instead of going directly through the SBA, you go through an authorized lender. These are banking and financial partners that the SBA has chosen that are allowed to give out SBA funds on behalf of the SBA. Basically, how it works is that these banks give out SBA loans to small business owners, but then the SBA and the government insures that loan. That way, if the loan is defaulted, the SBA will help the bank get those funds back and they'll pay the bank back for that money. It's basically a way for local institutions to give out small business loans without nearly as much risk, and it's a loan that's insured by the government. Now, whenever it comes to choosing what type of bank you want to go to in order to get your SBA loan, you are probably naturally going to gravitate to those large banks and those large lenders, things like Bank of America, Wells Fargo, Chase Bank, and things like that. But the thing is, these big time banks oftentimes don't want to work with small time entrepreneurs. And in my experience, it is very hard to get approved for a first time loan through one of these lenders. So rather than wasting your time on these very large financial institutions, I would instead encourage you to look into going with a local branch, a local bank, something that is local to either your state or your city. Now, whenever I was going through the process of applying for an SBA loan, I sent out dozens and dozens of applications. I sent out hundreds of emails. I called so many banks asking for information on how to apply for an SBA loan. And of all of the SBA loan applications that I sent out, I was only approved for one, and it was the one that I ultimately ended up getting my funding through. Now, local institutions, in my experience, have a much higher approval rate for first-time entrepreneurs, for first-time lenders. This is because they are more ingrained into the local community. Large banks like Chase Bank, for example, they just simply aren't interested in those small-time loans. And so whenever you go to the small banks, they are more interested and they are more willing to work with you. Now, the SBA has an authorized lenders list. I will include this list down in the description below so that you can go and navigate to your city, to your state. And I would encourage you to just try to find some of the local lenders, give them a call, and see what the process looks like for them in order to apply for an SBA loan. Now, whenever it comes to applying for the loan, each bank is going to be slightly different from bank to bank. The application process varies, and the information that you need to provide varies as well. Now, whenever you're going through this process, I would again encourage you to go onto the SBA's website. I would encourage you to find a list of local banks in your area, and I would literally just call every single one. Give them a call, ask them to schedule a time where you can meet them face to face, or alternatively, have a phone meeting where you can discuss the different types of loans they offer, what the application process looks like, what they look for in loan recipients, and so on and so forth. You can get a lot of information from bankers, and you can get a really good idea of whether or not you would be approved if you applied. If you talk to a banker and the banker just flat out says, yeah, we typically don't look at funding this type of business, then I would encourage you to just move on. There's no reason to waste your time filling out an application that most likely won't get approved. But alternatively, if you have a conversation with a banker and the banker understands your business model, the banker kind of jives well with you, then I would fill out the application. And for every single one of those positive discussions that you have, I would fill out the application and see what the result is. Now, whenever it comes to an SBA loan application, it's not as simple as just filling out an application like you would if you were trying to get a loan for a car or a loan for like the EIDL grant program. It is extremely, extremely strenuous. They ask for a ton of information. It is very much closer to getting a home loan than it is for an auto loan. And you should be prepared to give that information to the bank in a timely manner. Time is money, and in the case of loans, if you take too long, then the bank could simply move on. Now, whenever it comes to filling out the application for the bank, you will number one have to provide a application. You'll have to fill out kind of your standard application that asks for things like your date of birth, your name, your address, your work history, etc. You will also need to provide a personal financial statement. This is a personal financial statement showing your personal finances. A standard personal financial statement looks like this, and it goes over your liabilities and your assets, which then will total out to give you your total net worth. This is basically your finances at a glance. It shows you where your money is invested, how much money you have, how much of those funds are liquid, and alternatively, it shows you how much money you have tied up in things like mortgages, loans, debt, things like that. This is a very important piece of information that the bank will want, and I would encourage you to build this out before you end up approaching the bank with your application. Now, whenever it comes to building out a personal financial statement, you don't have to overthink it. There are tons and tons of templates online that you can use. It is very, very simple. And the process that you need to take in order to build your personal financial statement can be equally as simple. I would encourage you to sign up for services like Mint.com. It is completely free, and with Mint.com, you can see all of your bank institutions at a glance. You can sync Mint.com with your credit cards, with your debit cards, with your banks, with your savings account, with your investment accounts. And at a glance, you can see how much debt you have, how much money you have in the bank, how much assets you have. And really from there, it's just a numbers game. You simply have to add up these numbers, write it down, and then your personal financial statement is created. In addition to creating a personal financial statement, you will also need to create a business plan. This is my business plan. This is actually my exact business plan that I used in order to get approved for my $330,000 loan. You can see here that it is relatively thick. I mean, for a business plan, it's a thick document, but this is exactly what I used. I'm a big believer that you can never give too much information. You want to try to wow the bank with the information that you give them, especially if you go with a local bank that will be kind of taking a more hands-on approach with your approval. And I believe that giving the bank what they want the first time around is the best approach that you can take. Now, this business plan took me roughly 4 months to make. It was a really kind of evolving process. I started with just a draft in a notebook. Then I went to a draft on my computer, then I printed out the draft, then I marked up that draft. It went through about 7 or 8 different levels of revision. But ultimately, I came out with a product that I was really proud of and that really did a good job exemplifying why I needed these funds and what business I wanted to start. Now, whenever it comes to a business plan, there may be some of you guys in the comment sections of this video that believe that I took the business plan and I just went completely overboard with it, which is fine. But the fact is, I was approved for my loan, and I was approved for it at the age of 21, 22 years old, which is incredibly young and incredibly difficult to get approved for the amount of money that I was requesting. So regardless of whether it's overkill or not, providing too much information can sometimes be really valuable. So whenever it comes to a business plan, specifically my business plan, I included a handful of things in this plan. Number one is the table of contents. I wanted the bank to be able to open up my business plan and be able to know exactly where everything was at a glance. I didn't want them to have to sift through the pages to find the information that they wanted to look at. Number two is I provided information about what business I wanted to start. Now, I was a franchisee for a franchise brand, and as a result, on this kind of first section, I provided some background information on the brand I was wanting to franchise with. But if you're somebody who's wanting to start a business of your own, or alternatively, if you're somebody that already has a business of your own, then in this section, you could simply give a rundown of your business, how it was founded, what you do, why you're the best in your industry, and so on and so forth. In this exact same section, I also gave some quick facts about the business, like revenue statistics, the growth statistics, and things like that. I also gave information on myself, my company, and why I'm deserving of an SBA loan. The next section I included was a funding summary, and this was a summary showing how much money I needed, why I needed it, and what the money was going to be allocated to. I then included a section talking about why I chose this business, why I chose this industry, and why this industry was the right path to go down and why it was a safe bet for the SBA. I provided additional information as well, like where I planned on putting my location, why it was a good location, statistics associated with my location. Basically, I was selling the SBA on why my business model was going to work and why they should invest in me. I then went over a deep dive into demographics of the area in which I was looking to open up a location. If you guys are familiar at all with brick and mortar businesses, you probably know that location is hands down the most important aspect of a brick and mortar business. And I wanted to really show the bank that I was approaching that I did my research, I did my due diligence when it came to the location of the business that I was wanting to open. So I provided a really in-depth explanation of where my business was going to be located, what types of people would be visiting my business, what types of marketing I would do to this types of people, what time of day they would be visiting my business, what days of the week they would be visiting. I did a full-fledged demographic to show, hey, I know my product, I know my customers, and I know how they're going to enjoy my product. And then lastly, I included sales forecast. This was kind of a written explanation of where I expected this business to go sales-wise and why it was going to go into this direction. I included sales forecast, so how much I thought this business was going to make in 1, 2, 3, 4, 5, 10 years down the line. I included different aspects of the marketing efforts. I included different aspects of how the pricing of my product would increase or change over time. Basically, I just gave a really in-depth explanation of the sales and pricing associated with my business model. At the end of my application, I gave an appendix which showed what type of documentation I gave in addition to my business plan to support the fact that I was a worthy entrepreneur to give a loan to. In the appendix, I included my resume. So for me, I was opening a franchise, so I included all of the different franchise businesses I had worked in that were in a similar industry to the franchise that I was wanting to open. Now, whenever it comes to your resume, you of course want to really emphasize applicable skills and applicable work experience. For example, if you're wanting to start a business in the automotive industry, it probably doesn't matter if you worked at a gym whenever you were 17 years old. You want to make sure to keep it applicable, keep it professional, and use your resume as a way to show the SBA that you are a valid candidate of a loan. I also included a copy of my personal financial statement, which I mentioned earlier, as well as a statement of financial condition, which basically shows and tells the bank how much money you have and what your financial standing is at a certain point in time. This is very similar to the personal financial statement, and if you can make a personal financial statement, you can definitely make a statement of financial condition. Then in the other pieces of the appendix, I included more information like maps showing where the location would be, a demographics report showing what types of people lived there, as well as different details regarding the location itself, as well as the signage associated with the location. Basically every single thing that I had thought of in order to either boost sales or solidify this business was something that I included in this business plan. That way I could show the SBA that I was a valid candidate for a loan. Now, your business plan and the importance of a business plan really can't be overstated. It is extremely, extremely important because the SBA needs to see that you are a valid candidate and that you are legitimate. A business plan should show the SBA that, number one, you know what you want to be doing. You know what business you want to start and you have a clear vision of what that should look like. Number two is it shows the SBA who you are and what you want to do. Number three, it tells the SBA why you are better than everybody else. Basically, your business plan should be like the who, what, when, where, and why of your business model. And it is so incredibly important to you getting approved for an SBA loan. Now, really, after you submit your business plan and after you submit your application, the process is going to be very different from bank to bank because from that point forward, your individual banking institution is going to control the process. And some banks are very streamlined, very quick. They know what they're doing. They want to move. They want it to be efficient. And other banks are very different and they are really convoluted and very confusing, and it can be very overwhelming. Now, in my experience, more often than not, it is the latter, but maybe you are lucky and you will be the first one of those two. Now, ultimately, whenever it comes to getting an SBA loan, regardless of what banking institution you go with, it really does come down to being organized. I would say have your bank transactions and bank statements available to reference at any point in time. Understand how much money you have available to you and how much debt you have. Understand what your business is, why your business does their job so well, and why you need the SBA funds in order to expand. If you have all of these things on top of that 20%, as well as potential collateral available to give to the SBA, you will most likely get approved. The SBA is wanting to fund small businesses, but they don't want to take a ton of risk, and so they're looking for the lowest risk possible. And if you have all of these things aligned, if you have all of these things ready to go, then you are showing the SBA that you are a worthy candidate for an SBA loan and you are relatively low risk. Now, ultimately, whenever it comes to getting an SBA loan, it's not a one-size-fits-all, and there are a lot of different pieces of information that you may have to provide that I haven't talked about in this video. But ultimately, if you come prepared, if you have experience in your industry, if you have the availability to provide collateral or a 20% down payment, then you will be setting yourself up for success when going and applying for the SBA loan. I would encourage you again to contact local lenders. I would encourage you to try as many lenders as you can possibly find. Do not get discouraged whenever you get your first denial, because in my experience, it's not a matter of if you get denied, it's a matter of how many denials you will get. So be prepared for that. But all in all, getting an SBA loan is very possible, it is very doable, and if you can get it and if you can get approved, then it can be extremely valuable to you, your business, and your entrepreneurial endeavor. But like always, you guys, I hope that you enjoyed this video and I hope it gave you some valuable insight into what you need to do in order to get an SBA loan. Like always, if you have any questions, comments, if you have anything to add, I would love to hear it. So make sure to leave a comment down below. And while you guys are at it, make sure to hit the like button, hit the subscribe button, and hit the notification bell. And I will see you guys in the next video.